This is Author Talks on WCBS News Radio 880. I'm Ray Hoffman, host of CEO Radio. We're in the Adorama Live Theater in Soho. And my guest is Tony Robbins. Nothing more need be said.
Nice to meet you, Ray. Thanks for having me on.
And he's the author of a new book entitled Unshakeable. Tony is a force of nature, says Jack Bogle of Vanguard. I want to get into Jack Bogle a little bit, but to me, the most important thing here is that here we are on the 8th of March, 2017.
Yes.
Let's dial back just 8 years.
To March 9th.
Exactly, of 2009,
Yeah, 2009.
when the market bottomed.
Yeah.
The fact that we've gone from 666 on the S&P to something like 2363, it verifies the basic theory behind this book.
That's correct. That's correct. Listen, I wrote this book. I started this kind of path in 2008, actually, because when the markets were all crashing and I saw people losing their homes and half their net worth, it wasn't a statistic to me because I grew up dirt poor. So I wanted to help. And, I waited because I think the government's going to do something. Nothing happened. In 2010, I said, I've been coaching Paul Tudor Jones, one of the top 10 financial traders in history, for 24 years. So I said, what if I interviewed him and 50 of the smartest people in the world financially, all self-made billionaires, all did it from nothing, and see, can the average investor still win, and if so, how? And so that 5-year journey, I wrote a 700-page monster called Money Master the Game, became the New York Times #1 bestseller. I'm proud of it. But I wrote this book to do something really brief. You can see by my hand, it's a small book, And I wanted someone who literally...
It's a large book.
But I wanted people to be able, in like 4 or 5 hours or a weekend, really be able to know how to protect themselves, because we all know a crash is coming. Usually it's every 5 years is a bear market or a crash. It's been 8. It's the second largest, bull market in history. So it's not weird. Everybody's concerned. But what I want to do is say, here's how to protect yourself. And more importantly, here's how to take advantage when it comes. Because even though it's counterintuitive, right? If you're a baby boomer and you got started late and think you'll never be free, or let's say the other extreme, you're a millennial with all this educational debt and you think you'll never be free, when the market crashes, it offers you an opportunity that's rare in your lifetime where you can leapfrog from where you are to where you want to be. But you have to not be fearful. You have to understand what's really going on, and you can't time the market. Like Warren Buffett said, he said, the guys you see on CNBC, these market forecasters, he said their only purpose is to make fortune tellers look good, because nobody can do that. But if it's not about timing the market, it's time in the market. And anyone can become financially free. That isn't hyperbole, it's a fact. And I show you that game plan right here in just a few pages.
And one of the other things you go into is the fact that even if you went in on March, all the way, on March the 9th of 29.
Yes.
And you went the wrong way with a high-cost mutual fund or some other strategy, you're not nearly as well off as you would be had you just gone into a straight S&P index fund.
That's totally true, because where do people put their money? Most people have it in a 401k, and then where do they invest? In a mutual fund, an actively managed mutual fund. And if you're a huge company, they might offer you index, but smaller companies, which is 80% of the companies in America, they don't even give you access to the index because they want to charge you more. The average actively managed mutual fund costs 3.12%. And most people don't know what they're being charged, or they think it's less than 1%. The difference between 1% and 3% is a gigantic difference. I'll give you an example. Let's say you're 35. You've spent your whole life and saved $100,000. You put it in the market. You never add anything to it. It grows at 8% for 30 years. The last 30 years, it's been 10%, but let's be conservative. Where are you? Depends on fees. You go on the exact same stocks, but if you're paying 3%, you're going to get a different return than if you're paying 1%, because fees compound. So at 3%, your 100,000 jumped to 432,000, which feels really good. But if you paid 1% for the same stocks, you have $762,000, almost twice as much money. The first guy's going to run out of money at 79 and have a real problem. The other person has money through 93 years old. So fees matter. You got to know what they are. And the problem, like in your 401k, people don't know what they're being charged. 72% of Americans think their 401k is free. It's the furthest thing from free, right? And they're being annihilated. So, President Obama and the Department of Labor came up with this idea that we're going to make all the people who work with retirement accounts to be the F word, a fiduciary, to be a person who has to put your needs ahead of their own legally. But the industry got a hold of it and put so many holes in it that even implemented, it doesn't have a lot of bite to it. And now it looks like President Trump is going to not put those rules into effect. So I want people to protect themselves. Don't wait for the government. You can put so much money in your pocket just by eliminating the fees. It's just ridiculous. If you're trying to make, a 6, 7, 8% return, you're paying 3% in fees, you're making 5, 4, 3%, and that's before taxes. You're never gonna get where you wanna go. You gotta eliminate those extra fees.
And I notice even in reaction to the fiduciary rule, which maybe completely, the rug may be pulled out from under it, Merrill Lynch and a couple of other firms have announced low-cost retirement advice. So just the fact that you get some sort of stimulus in there, you can make a difference in terms of bringing those fees down.
But you got to look, when they say it's low cost, for 30 years they didn't have to tell you what they charged you. So now they have 25 to 50-page disclosure documents with fine print like this, that if you have a PhD in finance, you can find it. When they call it low cost, they're calling the initial cost low cost. But you've got to dig underneath it and see it. There's 17 hidden fees in most of those pieces. So you just can't take it at face value. It's like if you have money and you go to a broker and they'll say, give me your accounts and I'll do all your bond trading for free. Free bond trading. He doesn't charge you, but the firm charges you 3 or 4%. They call it bond math. So there's so much deception in this business. I mean, think about it. You can have a 401k, and there's a few places, if you have a small business, they say, we'll sell you the index, but they charge you a 3% load. So for those that don't know it, if you buy the S&P index, you get the top 500 companies, the fee for that is 0.14, less than 0.2%. If you're paying 3% versus 0.2%, that's 1,000% increase in cost. So do you want a Honda Accord for $20,000? Would you rather pay $1 million for the same car? Well, this is the only industry, because of the lack of transparency, where your neighbor might pay 100 times, 1,000 or 100% more than you're paying, or vice versa, and not even know it.
It's whatever they can get you to pay.
Yes. So what I did here is I actually hired a firm to come into all my companies. I got 31 companies, and I said, they're called America's Best 401k, and I said, look, prove it. Come to my companies and show me. The first company they came into, my education company, they saved my employees $5 million. They went right in their pockets, and they own all the same equities that are there. So I referred them out to all my friends, and I eventually became their partner. So if you go to showmethefees.com, you can put in 3 answers, and it'll tell you what you're being charged. And if you work for a company, you can send that report, because if you're the owner of a company, you are the fiduciary. You're legally responsible every year to compare your plan to the best. And if you get audited by the Department of Labor, last year, 75% of those that were audited were found out of compliance because they don't know they're a fiduciary. And the average fee to that company was $666,000 in fines. That's small companies. So anyone can change this. You just got to educate yourself. So I tell people, look, you can't afford not to spend 4 hours and know what 99.999% of the planet doesn't know, and then have a game plan, and then all you got to do is adjust once a year for 15 or 20 minutes, rebalance your accounts if you want to do that. That's how it works.
And what people don't tend to understand is just how the financial services industry operates in terms of the incentives that go with selling a high margin product.
They're not bad companies. They've all gotten bad rap, but we've created the problem. The problem is these are for-profit companies, so their job is to maximize shareholder value. Well, how do I do that? Well, you're not my shareholder, you're my customer. I got to make money off of you. So I only got 2 ways: get more customers and get more fees. Only way we get more fees is if you don't know what they are there, because otherwise you're going to bitch and complain and not do it. So I got to confuse you that you can't do this yourself in any way. Give me your stuff. I'm so much smarter. We'll work it out for you. And then go over here and you find out later, why did I grow so much? Because you had a big hole in your boat. You didn't get to your financial freedom because there's a hole. It's called fees or taxes if you don't manage it well too.
Now I want to shift gears a little bit. When you were writing the first book, Money Master the Game,
yes,
and you went around and visited all these, the Warren Buffetts, the Ray Dalios,
yes,
Jack Bogle.
Yeah.
I'm curious whether, after hearing their stories and all their advice, already, of course, you were a fabulously successful man, and you had a track record in business. Did what you heard from those people change your mind about how you approach business?
Massively. When I started this project, my companies were doing hundreds of millions of dollars. Now my companies do $5 billion. And so what I learned from these, I got a PhD in finance and business from forces of nature that control the world economy. And I'd go in for a 45-minute interview, like Jack Bogle said in here. He said, Tony came in for a 45-minute interview, and 44 hours and 30 minutes later, he said, I'd experienced the most probing, in-depth interview of my 65-year career, right? I got in there. I went to see Carl Icahn, and I'll never forget, I walk in, and Carl has compounded at 30% since 1968 per annum. Warren Buffett's only done 20%, but everybody loves Warren. He's your grandfather. He's funny. He's warm. You know, not so much when it comes to Carl. Right?
Yeah, who's picking up the tab for his lunch?
Yeah. So I go to see Carl, and I got, my film crew, and I go in for the interview, and he goes, "What are these film people doing here?" I said, "Mr. Icahn, you approved the interview. I told you in the interview we're going to film." He goes, "I don't want it. Out of here." And I'm like, "Okay, sound crew, come here." I figure I'll do an audio interview so I at least capture it. He goes, "No audio." I said, "What do you mean no audio?" He goes, "Bring a pen and paper. You got 5 minutes, kid." But 3 hours later, he's like, "Oh my God, you're the real thing. He endorsed my book, and I want to help you any way we can." So fortunately, these individuals have helped me learn, and I just try to take all of that and train other people. So while I wrote this book on finance, I do boot camps for businesses, right? And I help them grow 30 to 130% in 12 months or less. And I got billion-dollar clients like HomeX, the biggest builder in Mexico, and I got like a dentist's office with 3 chairs and 6 hygienists, helping him double his business. And I love that experience. But that's my business mastery program. It's a different approach, kind of.
When Ray Dalio, in particular, made the point that you really need to be listening to Contra Opinions.
Yes, you really did your homework. I'm impressed.
I read your book. Yeah, it's called Unshakeable.
Most people don't. They just interview you. I'm impressed.
Anyway, when Ray Dalio, he lives right up the road from me, but he never calls me. But
what's the matter with that?
I don't know. Anyway, when he did that, did that change you in any way in terms of looking for more Contra Opinions?
Without a doubt. In fact, we had a conversation the other day. I was at the Robin Hood Foundation. I spoke there, and he spoke as well. And he said something, and everybody leaned in the room, and it was so simple. But it was knowing the math. He goes, "Would you like to know how to reduce your risk by 80%? And increase your risk reward by 5 times?" And it's really simple. We all know, you don't put all your eggs in one basket. We know the importance of diversification. But the math is, he said, if you do 15 uncorrelated bets, you have an 80% reduction in risk and a 5-fold increase of risk-reward ratio. So I really made sure I diversified. And it's even why I have 31 companies even. There are companies in different areas that I love. 12 I actively manage. The others I'm more of an investor in. But the diversification is really the secret. I talked to David Swenson, who took Yale from... It took him 200 years to get $1 billion endowment. He made it $25 billion in 2 decades. It's unheard of. He's the best institutional investor in the world. But he said to me, he says, "Tony, I just got to tell you, you got to be tax efficient too." He said, "We made that money because we're tax efficient." He goes, "Look, if you know compounding, $1 doubled, 2, doubled, 4, 8, 20 doublings, it's $1,048,000. But if you pay 33% in tax along the way each year, how much do you have left?" Most people go, "Well, 33%, if it was $1,048,000, lost $330,000, you got $600,000. No, those fees compound. Instead of $1,048,000, you have $28,000 if you paid 33% in tax along the way. So tax efficiency is one of the things I got from Ray Dalio as well. That's so critical.
And when you talked to Jack Bogle, you went down to Valley Forge to talk to him, spent all that time with him. He's a very modest guy.
Very.
Did you get him to admit that he called the market bottom, which he did?
No, I didn't, because I know he doesn't want to get in the timing. One of the best things he shared with me is he said, "Tony, this business, you understand this business?" He said, "We took 1,000 gorillas, we put them in a gymnasium, and we taught them to flip coins." And he said, one of those gorillas flipped heads 18 times in a row. He said, "Now, when you hear that, what do you think?" I say, "Lucky gorilla." He goes, "Yeah, but when that's the hedge fund industry, you go, genius." And he goes, "It's just the law of averages. These guys will win." He said, "You got to put together a structure that's going to allow you to win over the long time." And you know what he talks about. You got to get in the market and stay there. His whole thing is get in the market and just stand there. Do nothing. That's how you get wealthy over the years.
What was the one study that I saw in here, and I'd never seen it before, but I know, having been a day trader, that it doesn't work very well.
Yes.
That says that you've got to outperform the market something like 91% of the time?
Yeah, they went through the math. Personally, the math is so complex, it's like algebra, but that's the accurate number of what you got to be able to do, and it's just not going to be able to do it. I'll tell you a more interesting statistic, though, that to me is really important for your listeners and viewers. Most people don't get in the market because they're afraid that they're going to lose. Right now, everybody's more afraid because 8 years in, it's the second largest bull market. If people understand that you can't time the market, that if they understand, though, another statistic, which is, look, in 20 years, if you were out of the market because you thought it was too frothy or, I want to save my money or something like that, during the 10 best trading days in 20 years, S&P 500 produced 8.2% over 20 years. If you were out 10 days, you got 4.5%. 10 days in 20 years. And you don't know which days those are. If you're out 20 days, now you're down to 2%. You might as well have been in bonds. And if you missed 30 days, 1.5 days a year out of the 20 years, you made no money. So the most dangerous thing is not to be a market. But then people say, yeah, but what if I get in tomorrow and today was the peak and it crashes? So what's really cool, JP Morgan and Schwab both have done studies on this, and they both model it in a similar way with the same results. They said, okay, let's pretend you're a genius that doesn't exist and you can time the market. And you got in on the bottom of the crash, the very bottom, and the next day it went straight up, the equivalent of March 9th, 2009. You somehow were able to figure that out. Let's say you were an idiot, not an idiot, but you just couldn't find the day, and you got on the worst day. You got at the peak of the market and it crashed the next day, 50%. Or your dollar cost averaging, you're spending the same on investments every month, and stocks go up and down, and so it changes the average price. Or you're in cash. Where are these four people 20 years from now? Well, we all know the worst one is the cash. That guy's a disaster. He's never going to be financially free. The person at the best timing had the highest amount of money. But over 20 years without selling, the only difference between the best timing and the worst timing was $14,000.
Incredible.
So you got to get in the market. Now, you don't want to just be in the stock market. We teach asset allocation. You have to diversify. But it has produced the greatest returns of the last 2 centuries. It also has the most volatility, which is why you have to diversify the way we teach.
And of course, there's also the issue of psychology. As you describe it, 20% mechanics, 80% psychology.
Yeah, which really, when we say psychology, it's a big word for how do you deal with your emotions. Are you fearful? Are you stressed? Do you find certainty? The whole point of Unshakeable is how would it feel if no matter where the economy went, no matter where real estate went, stocks went, you knew beyond a shadow of a doubt with total certainty your family would be prosperous. This book literally shows you how to do that while we feed another 100 million people. And it's really simple. Now, I actually co-wrote this with Peter Mallouk, and Peter's my co-author. I've never been a co-author, but I did it because I've learned so much from him. He's been rated #1, as I said, for 3 years in a row by Barron's, 2 years by CNBC. And the last time we had, 2008, when we had this big crash, he moved his business from 500 million to 2 billion in those 2 years without any advertising and marketing. How did he do it? He told all the people he was coaching, you have to know a crash is going to come. They come every 5 years. So it might be 7, might be 3. I don't know. I don't know the timing. No one does. But here's what we're going to do so you don't get hurt. So if the market drops 50%, you don't lose 50%. And then here's what we're going to do so you win. Because most people remember Jack Kennedy's father was Joe Kennedy. In 1929, before the crash, he had $3 million in net worth. 4 years later, 1932, he had $185 million. When things burn down, you have the greatest opportunity of your life because everything goes on sale. This shows you how to take advantage of that sale.
And you just have to have a sense of confidence without having too much confidence. One of the things that you point out in there is that so many investors really believe that they can master the market at any given moment.
I know, and everyone's selling you on you're going to beat the market, and there's a few that do beat the market. The Ray Dalios, the Carl Icahns. But, Ray Dalio, you have to have a $5 billion net worth of 5, not 1 billion, 5, and you have to have 100 million to give him 10 years ago. Today, it doesn't matter how much money you have, he won't give it to you, right? So most people, those unicorns, their firms are closed to you. So what you got to do is all you got to do is match the market, and you can do that the cheapest way with the index. And then, of course, you want alternative investments because you need the diversification we talked about.
I want to ask one more question, and that's in terms of you. You've spoken about how you live an energy-rich life. Yes. And yet, writing that book, Money Mastering the Game, in particularly, you had to be living a rather solitary life. It seems to be completely opposite of the person that you are. You
are absolutely right. That's interesting you picked that up. No, I'd rather pull out my eyelashes than write a book. And I didn't write a book for 20 years. Simon Schuster kept upping it. And I finally went to him in 2010, 11, and I said, look, this is a disaster. I want to write this book. And the president of Simon & Schuster is a brilliant man, John, says to me, he's probably one of the most respected people in the book business, says to me, Tony, it's an industry that everything's been said. It's a carcass. It's been overpicked. Those books don't sell. He offered me $1 million more to write a personal development book. And I said, I'm donating all the money away. I'm not doing it for money. I said, this book needs to go. So we argued back and forth. He eventually agreed. And then I saw him a year later. The book was the #1 New York Times bestseller, sold 1 million copies in hardback. And I walked into his office and I forget, he goes, you know what, I'm gonna say to you I think it was 3 or 4 most important words in the English language. You were right. But I'm just grateful to be able to do this. I don't like the process, But the reason I kicked this book out in 5 months is because I don't know when the next crash is coming, and I want to protect people now, and more importantly, get them so they can take advantage. And anybody who picks the book up will have that ability.
And this is a personal development book too, as was Money Master the Game. And the last, 14 pages are all about spiritual things, about living a happy life.
Well, yeah, because I spent a whole book showing you how to become wealthy, and it works, and it's from the best in the world. But I've interviewed the best in the world. They're not all happy. They're not all fulfilled. Some live a stressful life, even though they have billions of dollars. And so I wanted people to realize that your brain is 2 million years old. It's not designed to make you happy. It's designed to make you survive. So it's always looking for what's wrong, and it's so you can fight or flight or freeze and hopefully not be seen. But there's no saber-toothed tiger anymore, but the brain still works that way. So now we worry, what do people think about us? Or we worry, do I have enough money? And if you live in America, I think I don't want anybody to suffer. That's why I feed 100 million people a year. But if you're in poverty in the United States, you're not the 99%. You're the 1% in the world. Because 75% of this planet lives on $2.50 a day, $900. If you saw all those people out there protesting with their Apple phones, their Apple computers, and their Starbucks cup of coffee, that Starbucks cup of coffee is more than families, 2/3 of the planet has to spend on everything for 2 days, right? So we forget, and I'm not saying people should stay where they are, but you can only build on success. And unless you own that I'm doing pretty damn good and I want to do more, it's hard to build. Most people are always beating themselves up. Oh, I don't know what to do. I don't know where to go. This book shows you how to change that psychology as well.
And how does Feeding America work, and how does it tie into this
The way it
book?
works is I donate all of the royalties from this book in advance, plus I provide matching funds to meet 100 million people. And so we fed 200 million in the last 2 years alone through Feeding America. Anyone listening, you get the book, you'll feed 50 people, but if you want to help more, I'll match anything you put up to $5 million. So if you want to put up $10, $100, $1 million, it's okay. You just go to feedingamerica.org and you look up, they call it now, Tony Robbins feeding another 100 million, because every year we do another 100 million.
There's the challenge right there. The book is called Unshakeable. This man is unshakable, Tony Robbins. I'm Ray Hoffman. You can check out CEO Radio at cbsnewyork.com/CEO Radio. And we will continue with the WCBS conversation down the line.